Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you get some good trades. Let's take a quick look at the Aussie dollar and the New Zealand dollar. Both have been making significant moves to the downside over the last number of weeks. And in part, this is due to unwinding of carry trades in the market. Or the other reason is the central banks and the comments coming out of the central banks. And so today I want to briefly go over both of these pairs, what the central banks have said, and where both of these pairs may go to. Now, taking a look at the Aussie dollar, we see since early September we've had this continuous move to the downside. And Governor Stevens at the start of September had made the comment that the best thing the Reserve Bank of Australia can do for the economy is to run an accommodative policy and to keep rates very low. And he's made very clear his view that the Aussie dollar exchange rate is a bit too high. Well, those comments stirred the market to the downside. You add in the unwinding of carry trades, and then you get the push down. Today we had a move breaking a significant level at 88.45, a move of 95 pips down, breaking just beyond its average daily range. We'll talk about that in a moment. Now, when you come over and look at the Kiwi dollar, it had a significant move down today of 150 pips, well beyond its average daily range. Why? Well, Governor Wheeler of the Reserve Bank of New Zealand came out and said that the level of the New Zealand dollar is unjustified and unsustainable, and it is susceptible to a significant downward adjustment over the next 6 to 9 months. Wow, that's a mouthful. All he's saying is, hey, it's too high, folks, and I want it lower. And I'll do what it takes over the next 6 to 9 months to make it lower. So where's he taking it to? Well, let's take a look at both these pairs and let's talk about significant levels that both of them broke today and where they're going. Simply take a look at the Aussie dollar. Again, that moved to the downside after having spent time up around 92 to 94. Coming out to the weekly chart, what's so significant about this level was this was a low set back in August of 2013, and you had a lower low. Well, there for a period of time, the Aussie sat around about the 90 figure, and most traders in the marketplace were looking for the potential of an inverse head and shoulders. When you have a low, lower low, then a higher low, then over here, the possibility of an inverse head and shoulders. Now, we did have a downward sloping neckline, which isn't the best, but the thought was if this held right around that area, we would see a push back up into that 95, 96 area. Well, now we broke it. Going out to the monthly chart, where could we possibly go to? Well, one consideration is to think that the low point right here is about the 86.50 area. And there's the possibility that we come down there, maybe test that, and then take the bounce. If we don't take that bounce, then I'm looking for the possibility of the market to move down into this area, right where we have these open and closes, right around the 84 level, or right before we get to 84. If this level gives, then we have the possibility of seeing the market push all the way down to right around that 80.60, 80.50 area. And that's going to be a significant move down. Now, we might stop there for a period of time at 85 since that is a significant number. However, we'll have to see what happens. If the Reserve Bank of Australia still wants accommodative policy and still thinking that the currency is a little high, we could see it slide all the way down to these levels. So again, look for the possibility of the Aussie coming down to about 86.50, then coming on down to about 84. There's already traders looking for the market to come down to that level, and then the potential on down to 80.60 area. And if that gives, we got a long slide down. Now, taking a look at the Kiwi dollar, we've seen that the Kiwi, going back to early July, and the whispers that it was a bit too high, started seeing some movement down, started seeing the unwinding of the carry trades, and it just has continually been a grind lower. But today with his statement, a big move down, breaking the significant level of 80.50 on the weekly chart. You can see that that was that low going back to February of 2014. And now we're sitting at the lowest low for 2014, and has continued to move down. Now, where do we move down from here? There's a good probability that we'll move down here to these average lows right in this area. And if I simply take a fib retracement from that low, going back up here and look at the extension, that comes right in at the 141.4 level. And then there's a possibility of the market coming down to 1618. Well, coming out to the monthly chart, you can see that that's going to bring us down to this area, which we could even see it dip a little bit lower right in this area, that would take us back to 2011. We were at these lows right around that 74.50 to 75 level. Yes, there's that possibility of seeing the Aussie dollar slide all the way down to 75. Now we are looking at weekly and monthly charts. We're a little ways out from that, but if the central banks continue their rhetoric of accommodative policy or unjustifiably too high, we're going to see this slide down in both the Aussie dollar and in the New Zealand dollar. So with that in mind, look for any possible rallies in both the Aussie dollar and the Kiwi dollar. If you look back again on the daily charts, I would suggest look for any possible rallies intraday, see any possible move back towards 80.50 on the Kiwi or move back to 88.45 in the Aussie, and if they cannot get above either one of these levels, then look for a slide down lower. So my suggestion to you is to look for any potential rise in the Aussie and in the Kiwi, any strength in those pairs, and then look to sell the rallies. We'll be looking to see a move back towards 88.45 and then to sell the rally. Look for a move back towards 80.50 area. If it can't get above that, sell the rally. Well, this is Dean Malone with ComposFX. I hope some of this information will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.